Once again, just want to thank you for tuning in live. You are listening to The Vault. Your host, Sharif Ali. Just want to thank you all for tuning in live. Today's episode is going to be about corporations versus sole proprietors. Sole proprietors, a lot of people have these entities, so I knew that this would be a popular topic. So I just want to thank you all for tuning in live. We're definitely going to be talking about this entity today because I know that this is a very important subject. A lot of people have LLCs. A lot of people don't even know about business structures. So, my aim today as a trustee of my community is to empower you all and put you in a position where you can win. A lot of people go to business school and don't even still know what entity to pick, what's the best entity to pick, whether it's a S corp, C corp, or LLC. So I'm going to make this episode very general, which is going to be S corp, C corp, or LLC under the corporation title, and then sole proprietor is basically you owning those entities. And we're going to go over why is it that your entity is not filing the correct tax form as far as an entrepreneur or you actually doing business with the entity, because there is a corporate tax form. But I was at this even entrepreneur event this past weekend, and most of the individuals in the room were actually operating from a sole proprietorship, which means they own the entity. So I'm actually going to go straight from the horse's mouth, but I just want to thank everybody for tuning in live. I want to thank everybody tuning in a replay to learn about these business structures. Okay, so let's just go ahead and be clear. A corporation is created under the state statute, depending on the elections that is actually made for the number of members. The IRS will treat the corporation as a corporation partnership if it is not part of the owner's tax return, which is a disregarded entity. Okay, so we're going to go ahead and see what one of these structures and why they call it a disregarded entity. I'm coming straight from the IRS website. You all can, I recommend you all search single member limited liability companies, and that in turn will put you in touch, because a lot of people have what's considered a single member corporation. But if you have a single member LLC or corporation that does not elect to be treated as a corporation, the entity will be treated as a disregarded entity. And so that is how most people fall into what is considered the 1040 tax system with their sole proprietorship, and that is because they did not send in the election form, which is the entity classification election form, which is 8832. And they did not go and actually to their lawyer, because a lot of people go through LegalZoom. And if you go through LegalZoom, that doesn't mean that they did the follow-up work, which was file the entity classification form. So your entity, it says, will not be treated as a corporation. It will be treated as a disregarded entity by default. Okay, that shows that the person, the owner, which would be you, if you are the owner of the actual corporation, S corp, C corp, or LLC, will be treated as a disregarded entity on your federal tax return. Because remember, there's state taxes and then there's federal taxes, but particularly with this entity, social is federal, the EIN's federal, it's federal. We're talking about the federal. IRS is federal, okay, not the state. So individual owner of a single member corporation that operates a trade or business is subject to the tax on its net earnings from self-employment in the same manner as a sole proprietorship. Okay, so even if you are a sole proprietor, you're treated as someone that has a corp, and that's why you're paying self-employment tax. So a lot of individuals, they say, oh man, I have to pay self-employment tax, and it's just me inside of the entity. Exactly, because you don't have your entity classified the proper way. If the single member corporation is owned by a corporation or partnership, the corporation shall be reflected on the owner's federal tax return as a division of the corporation or partnership. It's just that simple. It's just that simple. There we go. Let's go further into it. The federal income tax purposes, if it's a single member corporation, which is usually owned by someone that has a social security number, is classified as a disregarded entity generally, and they must use the owner's social security number. Or if it has an EIN number, all returns are supposed to be reported on the related income tax return. For example, if a disregarded entity, such as an LLC, is owned by an individual, it is required to form a W-9. requesting the taxpayer's identification number and certification. Okay? It's just that simple, you all. I know that this is just a different level of understanding when it comes to, I guess you would say, business structures, but that's why I had to do this episode, was to make sure that you all understand the difference between a corporation and a sole proprietorship. A sole proprietorship is where you have not gotten the entity, even if you started it with the social, where you have not gotten the entity classified as a corporation. It's classified as a disregarded entity because you haven't sent in the election for classification form, and that is the 8832. It's just that simple. But people say, well, what if I don't have another member? Okay, I didn't say that you were supposed to have another member. I said that it was supposed to be filed as a corporation. If you do not elect for it to be filed as a corporation, just because you have the corporation on a state level doesn't mean the IRS is recognizing it on a federal level. You have to put them on notice that, yes, I started it from what is that, a social security number perspective, but I needed to be elected as a corporation on the federal side. Now, once again, you all can call the IRS and talk to them about this. Okay, they are very open and friendly to talking about this. So I don't want to hear, or no one should be saying, oh, well, the IRS is not a friendly people and all this other stuff. What do you mean? They're an accounting agency. They want you to account for what you need to account for in an appropriate manner. Okay, so corporations file 1120s. If it's a standalone entity, it's filing 1120. But if you don't have it classified properly, it will be by default classified as a 1040 on the sole proprietor side, and that is not something you want to do. Why? Because now you're not taking advantage of corporate benefits. You're taking advantage of you're not taking advantage of those corporate benefits. A lot of people think that they can, but you can even go talk to your tax accountant and your CPA and see if you can take advantage of it. Why? Because the entity on a federal level, which you're filing the federal taxes, is not looked at as a corporation. It's looked at as a disregarded entity. The tax structure is different. You're filing now the taxes on a 1040, not on the 1120. So you have a different type of tax structure that you're following, or the entity's following, on the 1120 side, whereas on the 1040 side, they're not able to do that. That's really, really critical. That changes the fringe benefits. That's why I encourage you all to read, or I definitely encourage you to read. You can order it from the IRS. It's publication 15B. That's the publication that allows you to understand the fringe benefits of the 1120, which is the corporation. Because if you're a 1040, you're basically looked at as a glorified employee. So I see people all the time that tell me they have these corporations, and all I do is ask them, so yeah, did you get the entity classified properly? And they say no. Okay, you didn't get the entity classified. Yeah, you got it. Yeah, you got it from the state level as a corporate entity, but it's not filed on the federal level as a corporate entity. And that document is what it is. So I'm just giving you the tidbit so you can go to your lawyer, so you can go to your CPA and say, I need to be set up and have my entity set up to where it's taxed as a corporation, not taxed as a glorified employee 1040. If you have a corporation and you're filing as a 1040, you're doing it wrong. I'm telling you straight up. I just shared with you all that the entity, the corporate tax form, is the 1120. That's not me. Let me read it to you. Let me pull this document up so I can read the exact title of the document. Okay, 1120 form. It says this form is the U.S. Corporation Income Tax Form. So how is it that your entity, quote unquote, because it's supposed to be separate because it does have an EIN. I'm pretty sure if you got the entity, then it's supposed to have its own separate distinct EIN. Correct? So if it has its EIN, why aren't you filing the correct tax form? You want to know why? Because most individuals are uninformed. And that's why I do trustee training, because as a trustee, you understand tax structures, you understand business structures. We're supposed to be doing business in the correct manner. So that means you're supposed to know what tax forms your entity is supposed to be filling out and which ones it's not to. Okay, and how are you taking a corporation and amalgamating it with what they consider the social security number an employee number? If you're an employee, you need the number. If you're an entrepreneur, you use an EIN, which is an employer identification number. The corporation has its own tax identification number, which is called an EIN, which is called an employer identification number. That is what the entity is supposed to be using to file its taxes. But instead, somehow, by being uninformed, and just because you're uninformed, they're letting it, you know what? The IRS says, we're gonna tax you for your ignorance. Go ahead and put it on your 1040. But in all actuality, the 1120 is the U.S. corporate tax form, and no one's told the average individual that. Not even a lawyer that may even start it up. So a lawyer will charge you $1,500, tell you, oh yeah, I started up your corporation for you, but you're still filing it as a W-2, still filing it as a 1040. When in all actuality, you're supposed to be filing it as an 1120. You should, for all you all that the lawyer set up your stuff, or LegalZoom set up your stuff, your corporation, you should go back to them and say, why didn't you file a 1120 for me? I mean, why didn't you file a 8832 for me? Why didn't you file a 8832 for me? So I can actually have my entity classified as a corporation. You should almost be ready to sue them. Why? Because they didn't set up your entity as an actual corporation. Did they give you a corporate shell? Yes, they did. They gave you a corporate shell for the state. But that doesn't mean that they gave you an entity that's taxed as a corporation on the federal level. It's not taxed as a corporation on a federal level. Why? Because federally, you are filing taxes as a 1040. Whereas the corporation, if it's a true corporation, files an 1120 tax form. That's the facts. So it's up to you all whether you want to play ball the appropriate way and do business like a true entrepreneur. That's an educated perspective. So this episode doesn't need to be long, but it just needs to be short, sweet, straight to the point. For all your friends, you can ask your friends and your family members that are entrepreneurs. They say they got an LLC. They say they have an S corp. They say they have a C corp. You know what you should say to them? You should say, "Hey, did you file a 11? Did you file?" You can definitely ask them, "Do you file an 1120 at the end of the year for your corporation?" That's the first question you can ask them. But the second question is critical. Did they file the 8832? And if not, you can go back to your lawyer, and maybe you can't go back to LegalZoom because that's just some pansy operation going on over the internet. They're over here just getting people's money, setting them up as a disregarded entity when the entity needs to be set up as a corporation. Ask them, did they file the 8832? Now you can be single member still. You can be single member. It's called the entity classification form. Okay, it's to classify the entity as a corporation legally. Now, it's also a classification and election. So you want to make sure that the entity elects if it's going to have other partners, because the owner receives all the profits. But guess what? Corporations are pass-throughs. That means it doesn't need to get taxed at the corporate side. It can get taxed to its shareholders. Okay, think about it. If you supposedly are a shareholder of a company, that means you invested. That's fine. You're not taxed when you invest. You're taxed when you get profits, when you receive the profits, when you receive the interest, when you receive the dividends. That means you gained from the it's called capital gains tax. So you're the principal agent for your business. But the corporation, when it passes it along, you receive what's considered capital gains. Okay, the capital that's initially placed in the entity is called principal capital. That's not taxed. What's taxed is the capital gains, the interest, the dividends. But are you getting taxed directly, or do you have a trust in place? That's why I've started doing trustee training. That's why open enrollment is until September. Because we got a good group of people that we're able to work with and help them make sure that they're administering their estates and their businesses in a proper manner where they own nothing, control everything. See, just because you started the corporation doesn't mean you own it. You could be the manager. You could take advantage of all the corporate benefits through Publication 15B, but that doesn't mean you own it. You can have a trust in place that owns it. Did you know that? So you can still be two managing members, and the way to operate, everyone knows, I always told you all, if you have a corporation, you all can email me and I can give you a sample operating agreement so you can see, okay, this is what I need to send the profits to the trust, and I just be the manager on the state level. Because the trust is the entity that's going to take the profits. And you all know why I do trustee training, is because the trust is a legal person too. It can receive money and do what it needs to do as far as taking expenses and as well distributing income. Okay, trustee training is to put you in a position where you know business structures, how you learn where you learn own nothing, control everything. It's up to you whether you want to have your entity known as a disregarded entity or you want to operate from a position of power and control, and that's not being a sole proprietor. Anything you own, you can be taxed for. Think about this. If it's considered a sole proprietorship with the 1040, guess what's going to happen? That means if somebody wants to sue you, they can get that corporation from you, even though it has its own EIN number. Why? Because you still own it. You have to have an operating agreement in place that says, I don't own this entity, the trust, or a trust owns this entity, or one of my friends is receiving the profits from it. Now, yeah, you're working, but you can pass on a tax liability. That's why corporations are considered pass-throughs. They're considered pass-throughs. Corporations haven't always been favored in the United States because they have this distinct ability to be known as a distinct, separate legal entity. It's considered a legal person. It can do the same thing you can do. It can buy, sell, hold property. Okay, that's what it can do when you separate it and stop having it tied to you as your social. Okay, so a lot of historians, a lot of especially big businessmen, are not big fans of the corporations. But I mean, they're legal persons nonetheless. They're things that you can use in the public. So thank you all for joining me live. If you all have any questions, feel free to type into the chat. I want to thank you all for tuning in as well in the replay. If you heard, I hope this gave you some value as far as 1040. See, I just want to let you all know, brothers and sisters, this information is not for employees. So you're not supposed to be using your social to do business. You're supposed to be using the EIN, or the employer identification number. A lot of people want to go out and start corporations, but they're doing it from the uninformed perspective. You have to put yourself in a position where you understand the benefits of a structure. And a corporate structure is nothing wrong with it. It's just, are you operating from an informed perspective or uninformed perspective? And an informed perspective is dealing with it from knowing that, hey, I don't need my social tied to this. I need an actual EIN. I need to have my EIN in place, and I need to be administering the entity from a position of own nothing, control everything. So if you all want to get in contact with me, Sharif Ali, when it comes to dealing in trust, as a private trustee, or even as a board member or corporate executive, from the publication B perspective, you all can email me at hfrn.vault@gmail.com, and I'll definitely take care of you. We have some staff that answers the emails. Make sure that you're getting through. We have training classes going on for business entity and business structuring, and we're doing that in a private capacity. So hfrn.vault@gmail.com. Feel free to email us, and we will move forward from there. But I just want to thank you all and appreciate you all, and I want to go forward from there. I look forward to your emails, and thank you so much. So peace.